Nice to be in this place again, isn't it?
This is where we spent our first evening together.
Yes, dear.
Let's hope it won't be the last.
If you love listening to this show, please consider giving a rating and a review on Amazon Alexa or wherever you listen. We want to continue bringing you this amazing content, and part of our ability to do that means that we need a big audience. Now, it may not seem like much, but rating and reviewing the show will help more people find us, just like how you found this show. Simply on any podcast platform, search for a show, scroll down to the bottom, and push 5 stars. It's that easy. Thanks for supporting the show. Today, I'm joined by Rajeev Gupta, who is the Chief Product Officer and co-founder at Cowbell Cyber. And Cowbell is a cyber insurance provider focused on small and mid-sized businesses. Rajeev, thanks for joining today.
Thank you.
So your background is in mobile security, large-scale enterprise security, as well as architecture. So it's not surprising that you're the Chief Product Officer for this organization. It's very interesting. So I wanted to ask you a little bit more about what is Cowbell and how have you guys turned the cybersecurity model into a financial product?
Great question, Scott. Basically, there are about 1,400 companies in the cybersecurity space, and my background also is cybersecurity. As you said, I came from mobile threat defense space, and detecting threats on a mobile phone. It's pretty different than detecting threats on your desktops and laptops where you have a lot of log and historical data. In all my discussions when I was in the mobile security space with customers, with partners, whenever the discussion around risk management, understanding the risk and how do you handle it, risk transfer always inevitably came into the discussion. And risk transfer is nothing but insurance. There's a lot of time the companies have spent in detection, prevention, remediation. That's your 1,400 cybersecurity companies out there. But then the last piece is always missed. And I always had fascinating discussions with customers and partners. And when the opportunity around the Cowbell came being, it was like a no-brainer. It was like, there's so much of chaos in the insurance side. There's so much of data on the cyber side, cybersecurity side. It is just a matter of time where somebody has to take this and marry the two together. And it's like one of those moments as if I don't do it, somebody else is going to do it. And why not me? I'm better equipped than anybody else to do it. So we started the journey, and the results have been pretty amazing so far.
Yeah, it's fascinating because you're basically turning real-time threat assessment into continuous underwriting and loss control solution. And again, it's with the kinds of things that's happening in the world that may be driven by state actors that is looking to take hostage of organizations. This has become very, very critical. Can you talk a little bit about specifically some of the kind of approach and in terms of, let's say, the deep learning, for instance, as well as the actuarial science that tries to look for probability of threat exposure and then calculates the financial impact to that organization?
Absolutely, and that's one of the areas there where we excel in. Right, we pull data from a lot of sources. There's a ton of data there. When we started, when we thought that we had the idea, we knew there's data out there, but as we are already a year into the journey, we're realizing there's even more data that we anticipated. There's so much data out there that can be analyzed, and today, historically speaking, if you take a look at any cyber underwriter, they take these reports from security rating services companies, PDF reports, detail 50 pages, and they have to manually go through each and every one of them to really comprehend. And as a human, you can only do so much, maybe 15, 20, 30 variables that you can actually dodge and juggle and understand and comprehend. But with AI at our disposal, right, we are able to actually use even today with the I think we are at the infancy. We are a very early stage in the number of data sets that we are hitting. We have about 400 different features or risk attributes, so to say, that we assess on a real-time basis to assess, to compute this, what we call risk ratings factors, or the Cowbell factors. So these 400 attributes comes from the organization's publicly exposed compute, their history on the internet, whether it's a dark web, whether it's their loss dedication data, whether it's privacy rights, whether it's there's a lot of, if you have been in existence for a while, you have presence on the internet, and we find it, and then we use it in assessing the risk, and we do it continuously. The reason being, I've been on the other side in actually buying cyber insurance for the companies, and almost every time you are presented a long questionnaire, and a lot of the questions are at the whim, right? What am I thinking at that moment? I'm going to answer it. I will never answer something no. Somebody's responsible for something. Yeah, yes. And then I'm going to send an email, say, hey, Joe, you are responsible for this item from today onwards. So there's always that human intuition, human piece that plays into that manual underwriting process. And since it's a cumbersome 2 to 3 week process to get the paperwork done and get the questionnaire back and whatnot, it cannot be continuous, because those questions answers change, the risk changes all the time. By having an automated way to pull the data and analyze it on a continuous basis, we have actually streamlined not just processes, but improved the accuracy in underwriting with the large margin.
One of the trends that we're seeing within the insurance, regardless of the kinds of categories that we're talking about, I think within the commercial side, is this notion of real-time data. And I wonder how your continuous underwriting and the scoring that you're providing is allowing for dynamic premium pricing, not only for the initial kind of quote and pricing, but on a continuous basis. What are you seeing in terms of on the brokerage side?
Right. Excellent questions. Actually, our product is an admitted product. It has to be approved by states. Given the history of cyber insurance in the market, it's only underwritten once a year today, which is pretty bizarre. It means even your auto insurance is underwritten twice. Right. So the idea of underwriting more often is because if the risk changes more often, then you should be underwriting more often. And given where cyber is, means we should be underwriting every month. And that's our North Star. That's where we want to be. We are started with our continuous assessment platform. We have continuous underwriting, but we don't trigger today. We don't change premium on the policyholder on a monthly basis. But if the policyholder chooses to, if they've done an awesome job in improving their risk posture, they can always opt in for underwriting. Now, the product that we're launching now, actually, we're trying in few states to see how we can actually have a monthly premium, almost as synonymous to Metromile. That may not be a right analogy, but the idea is if you're doing good on a monthly basis, your risk is going down, you could actually enjoy a lower premium.
Yeah, I think that makes a lot of intuitive sense. I wanted to ask, in terms of the way you guys are organized, are you guys actually organized as an insurer and licensed at the state level, or are you guys essentially providing the data to the product manufacturers, in this case, the insurance brokers or the manufacturers? So
we provide insurance product, and we sell through agencies and brokers. So we are kind of the carrier. You can say we are MGA. So we have the underwriting authority. We use the tech to underwrite ourselves. We don't sell. We are not security rating services player. Basically, we are not. So the idea is all the AI modeling, all the data that we generate, all the risk attributes we have control over. We use it for better underwriting purposes. And there is a reason for that. We call it a vertically integrated platform. When you actually buy the risk from a third party as an insurance carrier, you're only seeing the surface. You're only seeing maybe a single risk factor or a little bit of a details. You don't have access to the granular risk attributes that you really need for further down the line for catastrophic modeling, to really understand how the risk aggregates. Different attributes of the risk may aggregate at the top level for you to better manage the risk. And that's why we started with the vertically integrated platform. The 400 attributes I said earlier, we can actually aggregate any of those attributes all the way to the top, and then see if there's a risk aggregations happening. If there's a catastrophic failure, that's building up in a portfolio.
Yeah, it's interesting because you guys are falling under insurtech within fintech, but of course, this crossover to cybersecurity. What are kind of the unique challenges of being an insurtech? What maybe it's on the regulatory side, for instance, that maybe in your prior roles, just looking at cybersecurity, you didn't have to deal with before.
Oh, excellent question. I feel like building an insurance company with the tech background is like building two companies at the same time, because I've come from software background. It's all about software and everything here, because especially it's an admitted product. It's a very regulated market. You have to actually work with the state governments to file the product, to work with them back and forth to really understand. So it's we have to work within that framework that's already established, and it creates its own challenges and opportunities. But it literally feels like building two companies in one. Yeah.
That's very interesting insight. Now, we've had companies like Security Scorecard on our platform before, and for them, it's really providing the data to not just insurance but also rating companies as well. That when you look at the health of not just organizations, but even down to individuals, cybersecurity represents a lot of the kind of interesting dimensions that makes up the overall risk assessment of an organization. How do you foresee that your product will change over time, and the kinds of features are you looking to develop?
Yeah, so Security Scorecard, a great company, by the way. A lot of admiration for what they have done and their reports they generate. Uh, the their purpose, as you said, their target market is not just insurance. They're creating a generic product that fits all. They provide to rating services, the M&As, acquisitions, supply chain, whatnot. Right? So there's a lot of use cases there. Our sole purpose of assessing the risk is better underwriting. So one of the things we do is, instead of creating a single score, we actually create a multivariate risk ratings factors. Those are very much aligned with the actual coverages. So it's all about understanding the risk. You can group the risk, you can align the risk, you can categorize the risk whatever way you want. But since we control both sides of the equation, we can actually tailor it to better suit the needs. And not just at the underwriting time, but even loss control and also CAT modeling, catastrophic modeling. So having the control on both sides gives us a lot of flexibility in really understanding the risk in and out and grouping it different ways and looking at it in different ways. Mm-hmm. So from a roadmap perspective, I think we will be going a lot more deeper into catastrophic modeling as we have a little bit more history, and the fact that we have granular access to all these risk attributes, really puts us in the right spot to have, when as a reinsurer, I'm doing a portfolio management. I really want to understand where my risk is. How can I divert some of my risk from here to there? How can I manage the risk better? I think we can do an awesome job there because of the background.
Very interesting. I want to explore just briefly a couple of areas. One is around how you guys fit in with a bigger insurance picture. I think in the last 10, 15 years, fintech overall has really blossomed, and we're starting to see some incredible liquidity events and M&A activities. So that's kind of a broad question. And the second part is around market traction as to where you guys are with market fit and what's the kind of market demand signals that you're seeing.
So first, we launched our first product in February. So we have been in the market for a while now. Of course, with the COVID and everything, the uptick is a little slow, but we are still seeing a lot of traction. As the states are opening up, we are actually right now actively open and in business in 18 states. The second product that we are in the middle of launch, actually, it could be as early as next week. That goes all the way to businesses up to 250 million in insurance and limits up to 15 million in cover. That is a much more broader product, much deeper product, and it's going to be live within the next week or two. And that one, when we launch, we will be launching right in 10 states in the beginning, where we are already approved. And then by the end of the year, both the products will be accessible in 30 states.
Terrific. Sounds great. Excellent. Well, my last question for you is in terms of, because you've been in this business for so long in terms of cybersecurity and just general software and architecture, is that you must have seen different projects and products that have come and gone for different reasons. Any kind of lessons learned, any wisdom that you can share with the listeners?
Yeah, I mean, one of the things we are seeing is because of the rapid growth, the speed at which we are moving. Means insurance is known for slow moving, right? Beast. It's sometimes people call it's slower than banks and governments combined. So we launched our first product in less than a year, our second product in another 3-4 months. So we are running into challenges because the rest of the ecosystem is not moving as fast, and that's what creates challenges and opportunities. All the partners that we are working with, they all see the value, they all see the vision, they all are very motivated to work with us. They all are upgrading their platforms to suit the needs. So we're excited. We're pretty excited. So in terms of the learning, I think any challenge can be seen as an opportunity. Means that's one way we look at it, right? When you run into, somebody may look at this and say, hey, insurance is pretty boring, pretty slow, pretty, there's not much to innovate. But there's so much of innovation, not just in cyber, it's outside also within the insurance space is happening. And then even though it's a slow moving, actually the fact that it's slow, it's actually brings more opportunities. So it's the same thing, right? It's two sides of the same coin. So I would say from a learning perspective, if you run into a wall, that actually is not a wall. That's a lot more than that. There's actually a lot of opportunity there. That means a lot of people have just walked away looking at the wall.
Yeah, I couldn't agree with you more in terms of market inefficiencies, and it's really those market inefficiencies that really is ripe for opportunities and monetization. So today I've been joined by Rajeev Gupta, who is a Chief Product Officer at Cowbell Cyber. Thank you for joining today.
Thank you for having me.
If you've enjoyed this episode, take a moment to rate our show on any podcast platform that you listen to. Scroll down to the bottom and push 5 stars. It's that easy. And as always, thanks for listening.